Good afternoon. Ira Epstein of Linn & Associates with your metal market wrap-up for Wednesday, 27th of January, 2021, 5:30 p.m. Central Time. Wasn't able to put out a morning flash update this morning due to a lot of things, mainly controlling risk in the market in my brokerage firm, which we did. Nobody got hurt that I'm aware of. And, well, you know, people can lose money and make money on days like today. But what was today about? Well, you'll hear that in Reddit and some of the other social media platforms, traders that gang together, they try to label them as Robinhood traders, TD America traders. I know what went on there, and they're watching these, and they're attacking stocks that have a large open interest. Now, in tonight's report, if you get my written update, I'm giving a link so you can understand that there can be a larger short open interest in the stock market, in individual stocks, than there is stock. It's not like futures where you get a buyer to come together, a seller to come together, and you create a contract. Not like that at all. So you can loan stock, and it's a domino effect. It keeps going. It's been around for years. It's nothing new. It's done in most cases to provide liquidity to the market, and I don't see anything wrong with it. Problem is these newer traders, a whole new generation of them, and I must say they're impressive, and they attack the markets. Do they impact me? Not the way you might think. I'm a chartist, so I'm not a fundamental trader by nature. The fundamental traders are the ones getting steamrolled because they'll look at these stocks and they'll go, how could GameStop be up as much as it is in a week? We're talking hundreds of percentage points. How could that be? The company, nothing has changed in their fundamentals. Well, you're running the shorts out of the market. Margins happen. Robinhood shut down trading in a number of these type of stocks today. So did TD Ameritrade. I know because I was getting calls from people saying, do you know where I can get in and blah, blah. I don't do that. So I'll leave you on your own. But in the metals, we didn't see anything positive today. In fact, it's generally events like this that hurt the metals. You'll say, well, people run for the markets that they can go in and get safe haven protection. Well, that would be bonds and notes typically. It used to be gold, but it isn't right now. People dump everything to get margin money together. That's been the nature. How do I know? I have owned stock firms, commodity firms at the same time. I speak from experience as to what people do. I'm not saying if it's right or wrong. I'm speaking from my own experience, okay? That you can't take away from me. I saw it happen. I understand what happens. All right, today was a big rally in the dollar index. The Fed did absolutely nothing. So what you might have thought the Fed would be the impact on the market, this all came from a stock market play. When you look at gold, we've been in the same problem that we're in now. It is staying under the 18-week moving average of closes. What does that do to the market? Keeps the bias of the market down. When we look at the chart, we're caught between this 1960 area, 1800, haven't even been able to bounce more than about a third off that low. Not a sign of bullishness at this point. With today's action, what you now did is you have confirmed lower highs, lower lows in the market, bearishness again. Where did the market falter? The 200-day average, it kept hitting it. Yesterday was the first day it didn't hit it. Today, of course, and this is tonight's trade. We're already looking at Thursday trade. I'm fearful that you're going to get a bearish crossover where the 18-day average gets under that 200, and I don't know how the traders will react to it, but it is not a bullish event. When you take a look at Bollinger Bands, if the market were to fall apart and drop down, next target could be the lower Bollinger Band. What do you need to end this leg in the market down? You've got to get over 1867.40, close over that, and you get the bias up, but nothing, I want to make this ultra clear, nothing on the current chart pattern can turn the swing line up. You can negate the downtrend, you cannot start an uptrend. When I come to the slow stochastics, they have corrected oversold, but they're not lifting at all. Not lifting isn't bullish or bearish. They're just sort of hanging here as the market drifts. Interesting. In the gold-silver ratio, we keep coming back to this 18-day moving average of the difference of the ratio, and it's staying above that number. That means gold stays stronger than silver. That's the way I look at it. And when you look at the silver market, well, unlike the gold market, and I'll come back to the gold right over here. I want to get over here. Unlike the gold, which failed to hold the key moving average, it was fighting there for a while. I'll come back to the silver now for you. Still, the 100-day average is very much in play here. Okay, so the moving average people are looking. The market got under it. They're able to recover late in the day from there and still over it. Should it give ground with the lower highs, lower lows? The potential's then for the 2413 level, the lower Bollinger Band. Similar to the gold market, if you take out a couple of days ago's high, the 2583.5, which happens to also be the 18-day average, you break the downtrend leg, but you don't start an uptrend leg. In fact, nothing can start that. You get short covering, but not the definition of starting a leg. Copper market, yesterday in my report, written report that a lot of you don't get, but you should, I bring up key points. I brought up the Chinese Lunar New Year, which is right around the corner. And during that time frame, if the Chinese are going to load up in supplies, you'd see it, because during that 2-week period, everything basically shuts down. And the fact that they only had 75 new cases of COVID-19 reported in the country, whether you believe their numbers or not, is immaterial, but that's what they're claiming, means travel's going to happen, this holiday's going to go full steam, whether the government likes it or not. It's bearish, that market, in the near term, because you don't have the Chinese buying. It's my interpretation, but I look at the new year each year, and I look at just before, are they loading up on copper or not? I am not seeing that be the case. In the platinum, so much for the uptrend. You had one chance, if you were bullish this market back here, to get out at what number? What do I teach here and in my charting course? The first time you hit a Bollinger Band, you take money off the table, and the pros will either jam a stop up or just come out of the market, whatever their technique. You were overbought, had a 74 reading, you hit the number. I certainly didn't know it was going to come down the way that it did, back to this 1067 level, which is almost $100 an ounce lower, but doing the right thing when given the opportunity, my definition of right, by the way, that's what I believe in. And the market waits for you to do things wrong. Believe me, the one time you break the rules, you get slapped in the face. The palladium is still very much in a downtrend. Lower highs, lower lows. Now it's hit the lower Bollinger Band. According to my verbiage, what are you supposed to do? When you hit the lower Bollinger Band, you are supposed to come out. Did it hit it either of these days? I call that close enough yesterday. You missed it by 70 cents. You're in that zone. Are we embedding? Well, you're trying to. You can't count tonight's action, but you can count Wednesday, as both numbers were under 20. The day before, come on, little birdie here, they were both under it, not the other day. So do you typically embed? No. I would expect to see a bounce in the market where it tries not to embed, but that doesn't mean it's anything but a bounce. The trend is down, the bias is down, you're oversold, but you can embed, and that means on rallies, to me at least, the pros are going to step in and sell. I've mentioned every day that the battleground was the 18-day average, and I thought the pros were making their stand with stops right under that low. Wow, I didn't expect this. So if you're saying to me, Ira, did you expect the challenge getting back up to 90, 95 that fast? I certainly did not, but I certainly expected that. And one of the things I told my traders was, you got to be careful. Today's the FOMC meeting. Do you really want to go into that report? You hear me saying all these things I say. Well, I can prove them. And how I prove them is in the morning at 5:40 in the morning, 5:30-ish, I start recording my video for my subscribers. 40 some odd charts every single morning, giving you my thoughts on the chart action. I will bring you in with the daily news, what's going on in Asia, what is going on in Europe, what's about to take place in America in terms of news, economic data, and the like. I give you information on what I call the shorter term trades, the swing trades, and the longer term trades, those based on the weekly charts. So I said news important. I already knew this morning because I was looking at the pre-market openings in stock, and you were already going nuts in the different stocks of GameStop, and then all of a sudden Express and Cost and other ones were moving. I didn't know what was going on, but I started watching financial TV. Now think about it. My videos go around the world. People are watching them. I'm giving you the news of the day on that. I think it's really important. I doubt that your broker's offering anything like this, chart coverage the way that I'm doing, in a way that you can just scroll to the area that you want of the charts instantly. How do you get it? It's simple. It's $7.95 for the first 30 days. You're not interested, you won't buy it. After that, it's $15 each 30 days or $13 a month if you pay a year up front. Pretty simple. How do you find out about it? Go to our website under the word research. It's there. Talk to my staff. Away you go. I'm Ira Epstein for $7.95. Don't be penny wise, dollar foolish. You have a good day.